Hey, what's up YouTube? It's Josh here with the Get Business Credit YouTube channel. In today's video, we are going to have a special guest, a fellow YouTuber, real estate investor, Sean Pan. He's from the San Francisco Bay Area. Welcome to the channel, Sean. How are you doing?
Josh, thank you so much for having me on the show. It's a pleasure to be here.
No problem, no problem. So great. Viewers, please make sure you stay and watch this video until the end. And if you're thinking about getting into real estate investing or fix and flip properties, rental properties, definitely watch this whole video and stay until the end because we have a lot of good information for you that Sean can give you some insight on. So Sean, let's get right into it. Can we give the viewers a little bit of background on who you are and what you do?
Sure. So again, my name is Sean Pan. I am a real estate investor based in the San Francisco Bay Area. I flip homes here, and I own a small portfolio of rental properties over in the East Coast. I am also a podcast host, a meetup group leader. I have my YouTube channel, as you can see down there. And I'm also a hard money lender with Conventus Lending.
Okay, great. You got a lot of things going on. That's how I came across you, is your YouTube channel on hard money lending. That's what leads us to today making this video. How do you have the time to put all the energy into doing all these different things?
It's like the 80-20 rule, right? The Pareto Principle, where if you focus on the 20% that makes the most sense, then you're going to get most of the results. So there are a lot of things that you could be kind of mulling on, and I try to focus on things that matter the most.
Right. Yeah, so I mean, I've watched several of your videos, and I mean, I know you know what you're talking about, and you wouldn't be doing this if you didn't. And it seems like you really are passionate about it, and you enjoy real estate investing and talking about. So hopefully, we can give some good information to the viewers. So, Sean, the big question I think that many viewers want to know: what is hard money lending, and can you just do that real quick in like 30 to 60 seconds on what hard money lending is, and then later in the video we'll go down through more in-depth detail on hard money lending.
Sure. So in essence, hard money loans are loans that are based on the hard asset itself. So we give the loan based on the property and not based on your own, credit worthiness. We do check your credit score, but we don't look at things like your debt to income ratio, your W-2, your income, tax return, stuff like that.
Okay, gotcha. So the main thing I think is about the property, if it's investable and then there's money to be made, and the return for both, not just the lender, the hard money lender, but also with the rehab costs, whatever it may cost, and closing costs and all the fees involved, correct?
That's right. Yep.
Okay. All right. So like I said, everybody, he made a great video. I think if you just type in "what is hard money" on YouTube, he'll probably come up right at the top. But if not, check the link in the description below. I'll have that video and his channel, and you can check that out. And he literally breaks down what hard money lending is and the most easiest, I guess, in layman terms, in about 8 minutes, and gets right to the point. Unlike me, I kind of ramble. So hey, my viewers know I'm honest. Okay, so let's see here. Other questions I had here I was going to ask you. So Sean, what about with people with limited funds? Like I said, like you just said, you don't look too much at the credit, but what about people with like limited funds and they don't have great credit, say their credit score is like 600 or 620, whatever. Can they be approved for hard money loans if they find a, say, off-market property or a pocket property that, is investable and, the returns can be high on the comps and stuff? Right.
I would say that as of right now, especially due to this current climate, like with COVID, there's a lot of uncertainty out there. I would say that most hard money lenders in general are more conservative than they were in the past. So even though you might have a great deal at like 50% of the ARV, so 50% of the after repaired value, if you have a super low credit score, you're still, kind of an at-risk borrower, and I don't know if the lenders will want to give you that loan. So typically, we see minimum credit scores of 620. And if you have no money as well, that's also a red flag, because in the worst case scenario, as a borrower, you can just walk away from the deal, and that would leave the lender holding the
Right.
bag. So essentially, they want to see that you put down money and you have skin in the game. But that being said, you could always partner with someone else who believes in you and wants to be an equity partner, and someone who's down to sign the loan with you. These are full recourse loans, which means that in the worst case scenario, when we do have to foreclose on you, if there's not enough equity in the property to cover their loan, then they can go after the other assets. So again, they want to make sure that you have enough money to be able to successfully complete the project. So long story short, we don't like seeing people who have no funds to purchase properties with a hard money loan.
Right. Because I mean, they can just walk away if they only have a couple $1,000s into it, and oh well, it's nothing. But then the hard money lender is stuck with having to foreclose it and may or may not get the money back.
That's right.
Right. So like, what if somebody has, say it's $100,000 distressed property and it's worth say 200,000. After repair values, it's worth 200,000, and they got it for say 90 or 100,000, and they have $5,000 or $10,000 to put it, skin in the game. Would that, and they say they don't, just hypothetically say they don't have bad credit, they just don't have a whole lot of credit established. Would that be, plausible to get approved for something like that, even with COVID going on?
Yeah, I think there are some companies that are down to have that high of a leverage, because at $100,000 with only 10% down, that's still 90% LTV, which is still pretty risky for a lender. They do prefer to see 20% down in general, just so that they have that buffer. I mean, again, back in the good old days, like a year ago, we were doing 90% LTV and 100% of construction costs, but now things have changed quite a bit.
Right. Yeah. So, I mean, it's possible. You just have to get with the right lender and get with one that's not going to rip you off, because I know there's some out there that have very bad reputation. You can just Google and see people that are on rip-off report that I've seen, and and we don't know both sides of the story. We only know one side of the story. But when you have no good reviews and a whole bunch of bad reviews, I mean, I think it's smart to do your own research and really check out the company that you're gonna get a hard money loan with. Is it true the more that the hard money lender wants to know about you and the more personal they get with you, that's going to improve your chances if they really are asking a lot of questions and everything about you personally and your background history? Is that normal or not? Because I've talked to a few different hard money lenders, and I noticed some of them were like all over me, and wouldn't leave me alone basically. But they really were trying to look at all the different properties that I, showed them that I was interested in to do the hard money loans on. But at the same time, seemed like they were really invested in looking out for me as well.
Yeah.
We're being honest with me, like that's going to cost too much if it needs a new water main line or whatever.
Yeah, I mean, I would say just like any sales role, people are trying to build rapport. So even though they may not fund this current deal you're looking at, they want to be top of mind for when you have the next deal and the next one that is financeable. So, I mean, I talk to clients all the time. I'm on like 5 or 6 phone calls every single day from people that come through my YouTube channel. And, for the most part, most of them are not ready to purchase a property. But my job is just educate them and, be nice to them, because who knows, in the future, they might have a great deal. Their credit scores may improve and they may have saved. And we want to be the ones that they call when they're ready for it.
Right. Just like a realtor. I mean, you may not be able to help them now, but 2 years later, it's building that contact and that relationship.
Yep, that's right.
So, okay. Yeah. So I guess the point I'm trying to make, because we have a lot of negative energy, especially right now going on with COVID. And I think a lot of people are down and out. And I think that's why a lot of people are trying to start their own business right now. And especially the last, say, 12 months, there's been so much pickup in search volume about business credit and building up, being an entrepreneur, starting your own business, because people don't want to depend on working for somebody. So I guess what I basically want to tell the viewers that, and correct me if I'm wrong, but say you have a 620 or 630 credit score, and you have $5, $10, $20,000. Don't be like, no, you can't even do this. You have to try. You have to find the property for one. That's, I think, one of the most important things, because the property has to be investable in the comps in the area. So when someone comes to you guys, like with as a new borrower, the first thing you look at is what the property, I would say, is that count like 80%, or because I was told by a few different hard money lenders that like that's 80% of what's looked at is the actual property. And then the other 20% is your personal, side.
Yeah.
So,
I mean, it's kind of hard to say because, it's kind of hard to say because it's like a holistic picture. Like if you have an amazing experience, you have a lot of funds and a great credit score, but then the property is not in the right location, like it's a rural property or somewhere that we just can't lend on because of state regulations, then that cancels that deal. But on the other hand, let's say you have an amazing deal, but then the borrower doesn't have the qualifications. They have like bad credit score, they've been foreclosed on, they're late on their mortgage payments, and they have no money, then that also kills the deal too. So it's like a holistic picture. When someone has a deal and they come to me, I actually have them fill out a quick pre-screener questionnaire. We usually ask them what the property address is, purchase price, rehab cost, estimated ARV. And then we ask them questions about themselves, like what is your credit score? What is your estimated liquid funds? From that holistic package, we can then do a pre-screen on it and then give them a soft quote on the rate.
Right, exactly. Yeah. See, he explains things so simple and so clear, easy to understand. So don't get discouraged, guys. If you're like, you have to at least try. You don't know until you at least try. So you can reach out to Sean. I'm sure he'll give you feedback. Do your own research, but don't think because you have 2 years ago you had a couple late payments, but that's all the problem is with your credit. And other than that, you have some liquid cash in the bank, I think it's definitely possible if you find the right property, and the right lender. And Sean, I think, can help out with that. So definitely check the links in the description below, and I'll have, again, his channel there. So, and subscribe to him if you're obviously interested into anything real estate investing or anything like this, hard money. So, so Sean, can you break down real quick the fees involved, like kind of what you did in that other video, your video on the back end fees of like the 2% or 2 points, and then like what do hard money lenders typically charge, with a new loan or say a high risk, like the ranges and stuff, and all that. So.
Sounds good. So when you're getting a hard money loan, it's going to be a little bit different from your conventional loan, like if you're getting a loan for your own primary residence, because our loans are going to be short-term loans. They're only good for about 1 year or 12 months. And during that time, we usually charge interest only. So normally during like a conventional loan, you have a principal payment and an interest payment. So while you're paying your mortgage, you're actually paying down the debt. But for an interest-only loan, you're only paying the interest on the property. So that makes the calculations really simple. You just figure like $1 million loan, right? You divide that by 12 and then you multiply that by that percentage rate that we give you, and that's going to be your monthly payment. So that's your interest rate on that, but there's also something called points. Points is known as your origination fee. Typically, we charge between 1 and 2 points of the loan amount to do your loan. We also do charge a processing fee of $1,500. And this $1,500, again, goes towards processing the loan and paying for the appraisal. And if you are getting a construction loan, there is something called a feasibility study. So when we give you a construction loan, we don't just hand you all of the funds on day one and say, hey, here's all the money you need to do your construction. Good luck. What we do is we pay you back in a series of draws. But to even like give you these draws, we do this thing called a feasibility study, where we get the scope of work from your contractor and we look over it line by line to just make sure that all the numbers make sense, that your contractor isn't ripping you off or isn't like ridiculously underestimating how much the project will cost. This feasibility study costs around $650 to do and is due at closing. And then finally, another thing that we charge is an inspection. So if you are doing a construction loan, then every time that you want to get paid back through your draw, we do send an inspector over to verify that you did the work that you said you were going to do. And every time we send that inspector over, we do charge $265. So those are the main fees that we do charge. In some states, we do have an in-house attorney fee that we do charge as well. And that varies between $999 and $1,500.
Okay. All right. Let me see here. As you were talking, I was jotting down some questions to ask you that in response on what you're saying. So how long does it typically take if all the ducks are in order for the borrow? The property is, investable property. It needs, rehabbed, obviously. But the person has good or fair credit, but, you guys or the hard money lenders, okay, because they have, skin in the game and all of that. How long does it typically take to get that appraisal? Once you guys get that appraisal, like the process, the time frame, how long does that take, especially with COVID going on? Is there a delay or?
Yeah, so it takes us about 14 days to close on a property for newer clients, just because, sometimes there's some growing pains with working with a new client. But once we have everything kind of in place, we know their process, they know our process, we can close as quickly as 5 days. So, I had a client who sent me a deal on Sunday and we were ready to fund by Friday. The appraisal process is not as in-depth as it is for conventional financing. So that's why we can get away with, waiting only a few days for the appraisal to go out and come back to us.
Yeah, speaking of that, so, and correct me if I'm wrong here, but the research I've done and a few different hard money lenders I've spoken to, they said, all hard money lenders are going to be more cautious if you have no experience. You're going to have to put, like you said, skin in the game, but in your points and the fees are going to be, higher. But after you, do one deal and it's successful and everything goes well, you do another deal. You're building up that. I don't know why I can't talk. My tongue is. But you're building that relationship up if you're using the same hard money lender. So is that like what you're saying? If you're building that relationship up and, that person is, doing exactly what they're supposed to do, everybody's making money, doing the deals fast as far as rehabbing, selling it, getting it on the market, sold quickly. Those are the type of deals you're saying the relationship matters and you can close a lot quicker, right? Once you build up that relationship.
And as you do more deals and as you do more deals with the same company, generally they'll give you more favorable terms too, because they want to keep you as a client. They want you to kind of be their spokesperson and maybe go on other people's like YouTube channels or meetup groups and talk about, oh, I use this hard money lender, use them as well. We always appreciate more referrals in business. So of course, for our best clients, we're going to give them the best terms and rates.
Right. So you guys hear that, even if you don't have any experience or whatever, if you have all your ducks in order, you found a good property, reach out to Sean for sure. And if he's not one of the 30 states that, that they do lending in, I'm sure he can refer you to somebody else that can. But definitely, don't get discouraged or anything like that. So Sean, what if you're a contractor, like that's your job, and then you want to get into the fix and flip business and your credit's fine and all that? Is that okay to do the work yourself, do the rehab work yourself?
Yes, it's totally fine to do the work yourself, no problem. But I just want to let you know, some contractors or wholesalers who have been in the business for many years, uh, they tend to like to use that as their experience when trying to get a discount on the points and fees. Unfortunately, we can't count that as experience. We only count the properties that you've had under title over the past 3 years towards your experience. So if you're just working under someone's on someone else's job, that won't count for the better rates and better terms.
Right. So it won't count on terms, but you guys can trust him to, if he has, general contractor's license, you guys can trust him to do the repairs and stuff.
That's right. Yep.
Doesn't. So what if he was he or she was a contractor and was taking a draw? Would you guys just send out a, inspector to make sure that it was done instead of actually hiring a contractor?
That's right. So it's the same process as usual. We don't actually hire contractors when we do the inspections for draws. It's just going to be a third-party inspector who goes in there and double checks the work. So it's the same process. Let's say they're a contractor, then they would be the ones who are writing the scope of work, and they're the ones that we do the feasibility study on that scope of work. Yeah, and then when we send the inspector over, we just kind of verify that they did the work that they said they were going to do.
Okay. All right. Gotcha. Yeah. So I know there's several viewers that, came on live stream a couple weeks ago and said they want to get into the fix and flip business. They're general contractors. They have their contractor's license, and that's what they've been doing for many years. They're fixing other people's fix and flip properties, basically, and they want to, get a piece of the cake. So, they may not have 100,000 to, do their property, but they can do a lot of the repairs themselves and save a lot of money. So, I think it would be great if you have that as a skill as far as being a general contractor and you get into the fix and flip business.
Yeah, I think they're going to be the best type of people because they know exactly the what it will cost to repair the property, and they may or may not have a better sense of the ARVs as well. And if they don't have the funds, then it's likely they can partner with someone who does. It seems to be a going trend right now that the deals are harder to find than the money. So if you can find a really good deal and you can trust the project management to a contractor, then they should be able to find the money without much hassle.
Right. That's what I've noticed. Like a couple of properties I was looking at about 6 or 9 months ago, they were off the market, and they were actually owned by other real estate agents. They actually owned them and were planning to do fix and flips as well, but then they got too much money tied up and they just need the cash right away. One property I was looking at was had a after repair value about $109,000, and he's willing to sell it to me for $24,000. So it's like, what's wrong with it? Like, I need to see everything, but it did need probably about $40,000, to rehab it completely. But it'd be a beautiful house after spending $40,000, But I wasn't able to physically be there, and it's something I'd want to micromanage. So that's why I had to pass on that deal. But I do know the real estate market right now is very thin, even non-rehabbed houses, traditional houses. There's, where I'm from in Greenville, Ohio, there's not many properties even being sold. But we don't know what's going to happen after COVID and things. There may be a lot of foreclosures, in the 6 months or a year or two from now, and that might open up something like 2008. We don't know,
Yep, we have no idea.
All right, so let me see here. A few more things. So can you go over the terms real quick? Like, so the viewers understand like what LTV is and all the different terminologies that, code words that, that's to do with hard money lending.
Sure, I'll do my best. So I would say LTV stands for loan to value. Essentially, you just take your loan amount and you divide that by the purchase price or the value. So say you're buying it for, $200,000 and your LTV is 80%. You just take 0.8, multiply that by 200,000, and you should get $160,000. So in that case, that's 80% LTV. ARV stands for after repaired value. That is what the property will be worth after you're done fixing it and flipping it.
Okay. So what about
that's it.
Yeah. Those are the two that because they're so close to each other. So I wanted you to kind of explain that. So what about like closing costs? I- That's 100% on, the borrower, or as far as all the fees involved, just, with the,
Yeah.
title
So
companies, escrow, all that. I mean, is that you guys don't, hard money lenders don't take care of that at all, or what? Like,
yeah.
as far,
As far
like,
as the closing costs are concerned, the points, origination fees, and processing fees are all going to come from the borrower at closing, and they are also going to have to pay for title and notary fees as well, escrow fees. And these are all standard to getting a property under contract, whether or not you are using a loan or not.
right. So do you guys have your own title agency that you guys work with directly, or can they just find their own title agency to handle the escrow and
Yeah.
deal?
So the title companies, yeah, those are actually typically the sellers are the ones that open their title and escrow when they put it on the market. Sometimes it doesn't work out, and then the buyers need to change title companies. So I've seen it happen quite a few times actually. It does delay closing a little bit, but it's not too big of an issue.
Oh, okay. Yeah, because one deal that I was going to do, the lender said everything has to go through his attorney and through his title company or whatever, and I don't know if that's just them trying to get more money out of me or not. I don't know. Let's see here. So just to do a recap here on this. So if, someone found the right property, and they're positioned fine financially and credit wise, they can expect to put down, like, say, a $200,000 hard money loan. What's a ballpark that they're going to have to, have for down payment? What are they going to have to?
Sorry, it's
Did
getting
I
a little bit
lose you
choppy.
there?
Can you repeat the question?
Yeah, I don't know why. You're lagging. I don't know why. Um, so say it's a $200,000 hard money loan, and the person has good credit, and they have plenty of funds in the bank. What are they typically going to need as far as, like, a $200,000 hard money loan? Is it going to
Yeah.
be 10%, 20%?
Yeah, great question. So I would say you need the 20% for the down payment. You can expect to have, 1 or 2% for the origination fee, so closing costs. And you want to have enough for your rehab costs as well as 6 months worth of the interest payments. And we want to see those in liquid funds. So whether that be in a bank account or a stock account or part of your 401k.
Okay. So it could be personal or business account that you have those funds in, as long as they're your assets.
That's right. Yeah.
Okay.
And if you're buying through an LLC, then whoever is like a managing partner should show those liquid funds.
Right. So if you're an LLC, you could, because a lot of my viewers are pretty much all LLCs, so they can show between their LLC business bank account X amount of dollars and then their personal side as well. It's no problem, right?
That's right.
Okay. All right. Let's see here. I think I pretty much covered everything. And like I said, you guys check out his channel, Sean's channel. He does a much better job explaining everything. I just wanted to get, his voice out there to you guys, so I can recommend somebody that's, knows exactly what he's talking about. And honestly, I've watched about 20 other YouTubers about real estate investing and hard money lending. They're very confusing, and they don't even sound like they just studied it for a couple of months and then started making videos about it. So Sean definitely, knows what he's talking about, and we'll put all of this information in the description below, and you guys can do your own research, like I always say. do your own research. So I think that's it. Is there anything that you want to plug or tell the viewers at all? We never know this video.
Yeah,
You
sure.
never know you never know the YouTube's algorithm. This could get a million views by tomorrow, or it could get 10 views. Who knows?
Yeah, let's go to the moon. So Josh, thank you again so much for having me on your show today. It was an absolute pleasure. I had a lot of fun on this. If any of you guys want to reach out to me, feel free to contact me through the link down in the description below, where you can find my channel. If you guys need to schedule a call with me to ask about hard money loans, again, that information should be either down here or on my channel as well. So thanks again so much. I really appreciate it, Josh.
All right, no problem. Thanks for coming on the channel, Sean. And you guys stay tuned for more videos. And make sure, don't forget to go to his channel, subscribe, hit that bell notification. And if you're not a subscriber on Get Business Credit channel, also do the same. We really appreciate it. Till next time, you guys take care. Thanks. Bye.
See you.